Hello, and thank you for joining Stock Market Daily. So, last night's episode apparently had no audio, and I do apologize about that. So, I will give you guys a quick recap of what I kind of mentioned yesterday. One of which is obviously, if you've been following along, I have been kind of gone for the past month or so. And again, I want to apologize about that. And I apologize in the video yesterday about just dropping off the face of the earth without any warning or anything like that. If you're a follower, it would seem kind of weird. But essentially, what happened was that I got really busy with work. I got busy with family and miscellaneous little projects around the house, and that just took up way too much of my time. And I just didn't have enough time to make videos. But no, my account is not blown up. I'm still here. I'm trading every single day. I just didn't have the time to make videos. So again, I'm sorry about that, and I'm sorry about the video yesterday. It had no sound or anything. So I'm definitely want to make up for that. Also, why I haven't made any videos is, the S&P has been pretty much a one-trick pony here for the past, well, probably more than half a month. We've been just pretty much going up and up and up with a slight little pullback or consolidation here and there, but for the most part, nothing really exciting. And obviously, as everyone knows, the premiums have been really, really low. And that's because there's not much fear. There's not much fear in the markets. There's not much change in the price. There is change in the price. It's been going up pretty significantly, and there's more exuberance, and there's not much people buying protection. So, the way that the SPX is sitting right now after today is actually a little bit of a bump in the implied volatility. I'm looking at 14.9%, which is about a percent and a half higher or so than usual. So that's nice. We did have a little bit of a down day today. Not much. I would say the only reason why we had this down day is because we had this massive spike towards the close yesterday. I don't know why that was, but I guess they wanted to kind of reverse this massive spike downwards. I understand why this would be happening because we've had we're almost setting records where the stock market's been going up nonstop. And you could kind of agree maybe that we need a little bit of pullback or a little bit of a consolidation. However, nope, they decided to bring it back up all the way to did we have a positive day yesterday? I think we did. Because of this, we had a little bit of a positive day. So pretty much flat on the open or slightly positive. Today we opened up a little bit lower and pretty much filled the gap there, broke down and ended up closing pretty much right where we opened. And some of these earnings and the news on the earnings is what's kind of driving some of this. The companies were expected to do really, really bad, and they're not doing as bad. And so we are in the in the period of, well, let's hold on and find out. Let's hold on and not sell. Let's hold on and not buy, and that's kind of where we are. There's going to be quite a bit of earnings coming out this week, so definitely exciting. Definitely, hopefully, going to see a change in the market after this. Personally, I hope the market goes down. I'm saying this as a long time bull. I always believe that, and obviously you could just look at the charts and the history that the stocks go up over time. So when I first started doing 1 day or 0 day DTE, I particularly focused on selling puts. I tried not to sell calls because my impression of the market is eventually it will go up and it'll go higher. Yes, we're going to have down weeks, months, days, maybe even years. However, in general, markets do go up. So, having said that, again, if you were following me for the past episodes, you know that I basically left on vacation and I did not believe that the market was going to go up. We had we had the budget that was about to go, with the vote on the budget for what was it? The Congress budget was going to, uh, had some issues with the votes about it going through, whatnot. Everybody kind of knew that that budget's going to get passed. The government's not going to get shut down. And when that actually became news, I expected that, to kind of be of a sell-off. That we got passed through that because there really wasn't a reason for us to go down or up on that news. Nobody really thought that was going to be a problem until it became a problem, and then the problem was solved. So the market probably shouldn't have reacted as much as it did. But shortly after, we also had some really exciting AI news. We had NVIDIA, and the frenzy just started from there. So the market's been going up ever since then. And because I did not foresee that, we're going to have things like the AI and NVIDIA and some really good earnings news here, I did sell a bunch of calls. So now I have 9 calls, just like how I had them previously. I have 9 calls that I'm rolling on a day-to-day basis, and some of them are really deep in the money. You could see I have 80 strikes selected here. We'll do all, so you could see this one. I believe this one's pretty bad. Let's see. Yeah, 42.65. That's probably one of my worst ones. And that's something that I'm gonna have to roll tomorrow. Let's see, are there any other ones? That's the only one for tomorrow. So I've been rolling them at 5 points at a time, really waiting for big down day. Um, and so far that hasn't come. There was one day that was pretty much a good opportunity, but I didn't have anything that was expiring that day that was potentially, a candidate for being rolled, 10, 15, 20 points at a time. And that's what I need to start focusing on doing now. But again, I'm still waiting for a day that's a bigger down day, or a couple of days that are in a downtrend. Then I could start rolling them quite aggressively. But for now, I'm basically rolling them 5 strike prices at a 5 strike price at a time, and I am doing them at the shortest amount of days as possible, because I am anticipating that we're eventually going to have to do something here with some red candles. I'm looking for them eagerly, but and if we don't get that, that's fine. And yesterday's video, I decided to specifically make yesterday because that was one of the lower profit days. But keep in mind, I am still making money when I roll. When I roll this option, I'm going to still collect a little bit of premium. Now it's getting a little bit worse, obviously, as some of the earnings and the Fed meetings and the CPI and the PPI data are, providing traders more of a full story of what's going on. But eventually, it's going to reset itself. And every single time I am rolling, I was collecting about $90 to $70. Now I'm collecting maybe 30 to 40 or so. But essentially, this thing comes in cycles. So there will be some more news, some more issues that might pop up, and people are going to be the volatility is going to go up, and we're going to be collecting more on these rolls. But the point is this: that there's no point to freak out if the option is in the money. For example, this one is very deep in the money, and essentially what I'm going to do is I'm going to roll it, and I'm going to collect a little bit of a premium on it. I'm not going to lose money on it. And for something like this that is this deep in the money, what I'm actually probably going to do tomorrow is I'm going to buy an option if I need to. I'm gonna check tomorrow, but I'm gonna buy an option. I'm gonna go out pretty much all the way till the end of the month probably the 28th or the 30th. Let's look at here, the 31st maybe. I'm going to buy the option, and these are pretty cheap at 5,000 level right here, going for, let's say, $30. I'm going to buy it, and I'm going to roll it, let's say, to that day. Yes, it's a full month that I have to wait, but that's just the reality of the situation. Made a lot of money doing this strategy, and it's unfortunate that these positions are pretty much right. You know, there's not much you can do with them. There's not much. You know, they're not earning as much money as before, but you know, having to wait a month or so is not that big of a deal. And here you go. I'm sure by that time this will change. You know, if you don't want to lose nothing on it at all, you'll collect $420 credit if you roll it by 20 a $20 strike price. You could do 25, and you will probably get filled depending on the volatility for the day. So, yes, having to wait a month is not pleasant. There's opportunity cost and everything. But like I said, I overextended myself. That was my own fault. It was 9 of these call options. If it wasn't that many, I would be able to roll them just fine with that and still continue doing my regular trading. However, having said this, this is not going to blow up my account. I can go out and buy a $5,000 strike price, and I can buy a $6,000 strike price, and it's still going to be okay for my account. So even though I over leverage myself on what I like to do, because I usually like to do 3 to 4 on each side, 3 to 4 on the put side, 3 or 4 on the call side when I do 0DTE. This was a special case, and it just didn't work out for me. I'm not mad about it. It kind of sucks, but now I just need to focus on basically getting out of it. And this is what it's going to take. It's going to take some time, and you know, the market's not going to keep going up, 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 and up. And eventually my strikes, you know, me moving them up and rolling will catch up with the market. The market will go down a little bit, and everything will be okay. So definitely going to be an exciting week. I apologize again about kind of leaving everybody hanging and about yesterday's audio issue. So I'm going to be creating more of these videos going forward, and I appreciate you guys for watching. Stay tuned. See you later. Bye-bye.